One of the things I think we should all do as investors is study some of the best investors in the world, see what they're buying, what they've made money on in the past, and see what we can learn from them. And obviously, one of the best investors of all time is Warren Buffett. As part of the process of owning Berkshire Hathaway, Buffett discloses what is in the stock portfolio every quarter. And so I'm going to dig into some of those numbers today. And I think it might be surprising exactly what he owns, not just the biggest stock, but how concentrated this portfolio is. As I'm recording, 92% of the portfolio is in the top 10 stocks. So this is actually a very concentrated portfolio. I'm going to cover the top 5 in a little bit more detail, but I will show all of the portfolio and all the major holdings in the Berkshire Hathaway portfolio here. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you are looking for the top 10 stocks to buy right now, check out fool.com/ASYM for their top 10 stocks. I'm going to start with this graphic because this shows the full portfolio. $313 billion is the entire market cap. Like I said, 92% is in the top 10 holdings, and the average holding period is 18 years. Just a phenomenally long holding period for an investor, very little turnover. But this big number right here is what's really surprising, is the allocation that Buffett has to Apple. 50.4% of the portfolio is in Apple as I'm recording. But this is not a typical Berkshire Hathaway or Buffett stock. He doesn't typically get into technology stocks, but he has with Apple. So if we look here at the holdings and the percentage that Apple takes as the portfolio, you can see that the position really started to grow in late 2016 into 2017. And by about 2018, Buffett had acquired essentially all of the Apple that he was going to own. The jump in share count that you see happen in 2020 is because there was a 4-for-1 stock split. Since those columns here are the share count in thousands, that's why the number of shares owned goes up by 4x. But he was not buying additional shares at that point, and that's why the allocation as a percentage of the portfolio stays relatively steady over that period of time. But I think it's important to go back and think about what Apple was in 2016 and 2017. This was not a company that was in the position as it is today from a market perspective. Shares did not trade at 30 times earnings. This wasn't viewed as the rock solid company that it is today. There was a lot of questions about whether the iPhone was going to maintain its position as the premium smartphone and a dominant ecosystem. Apple wasn't making as many of its own chips, so it wasn't quite as advanced on that side of things. And the services and accessories revenue was nowhere near what it is today. I've covered that in previous videos, but since 2016, it's not the iPhone that's grown Apple's revenue. It's accessories like AirPods and services like revenue from the App Store and like the massive check that they get from Google every year that has grown both revenue and earnings for Apple. So those are tailwinds that Buffett was riding. And when he was buying shares in 2016, shares were not trading at where they are today from an earnings, price to earnings or price to sales perspective. They were trading at a price to earnings multiple closer to 10 to 15. So if you want to take anything away from Buffett's acquisition of Apple and what has happened since then, I think there's a couple of things. One, the price that you pay really matters. Buffett likes to pay more like 10 to 12 times earnings for companies or 10 to 12 times free cash flow. He isn't going to pay this high multiple, especially where Apple stock trades today. But that also doesn't mean that he's selling. So he wants to buy at a very attractive price, and then he wants to hold for a very, very long period of time, and likely isn't going to unload those shares unless something fundamentally changes about the company. I'll get to that with some of the bank stocks. But before we get to the second stock, I have this quick message from our sponsor. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The second biggest holding in Buffett's portfolio is Bank of America, ticker symbol BAC. This is one of the big banks in the US. And this is something that Buffett has been involved in for a very long time. He was one of the critical people to restore some confidence in the banking system during the financial crisis in 2008 and 2009. And he maintains a very large position. You can see that the Bank of America position has hovered around 10 to 15% of the portfolio, now a little over 9%. But I want to combine this with another stock, and that is American Express. American Express is another one of these stocks that Buffett has owned for a very, very long time. You can see that there's no change in his position through this entire period. This chart goes back to 2013. So a 10-year period has sold exactly 0 shares over that period of time. The allocation has gone down a little bit as a percentage of the portfolio. And like I mentioned, that's because stocks like Apple have become a bigger and bigger piece of the portfolio. But these two kind of combine as businesses that Buffett likes, their position in the market. They both fall under this big bank category. I don't think the US is going to let big banks fail. And they generate relatively high return on assets because they have a better cost of capital than a lot of their smaller competitors. Now, one thing is interesting that I'll show is Buffett is willing to sell banking stocks. This is a chart that shows his ownership of Wells Fargo. And you might remember over the last few years, Wells Fargo has gone through a number of different challenges with fees charged to customers, not operating as efficiently as some of its rivals. So Buffett has sold out of that position and did that really when a lot of this news came out. So while he holds a lot of these stocks for a very long time, it doesn't mean that he holds them forever. If something changes about the business, if the reputation of the business changes, something he has talked a lot about in the past, absolutely willing to sell these stocks. And so that's what we see with these big three banks, holding on to American Express and Bank of America, but obviously exited the position in Wells Fargo. The fourth largest position is one that maybe Buffett is known for more than any other. He acquired a lot of this position in the 1980s. That was when there was a market crash, and Buffett took a huge position in one of what he thought was one of the more stable companies in the world, and that's Coca-Cola. And he's essentially done nothing with that position. This chart goes back to 2013, and Buffett's position in Coca-Cola has held at around 400 million shares. Now, this is one of the stocks that has not outperformed the market. And that's the biggest reason that you see it fall from 18% of the portfolio in Q2 2013 to just over 7% of the portfolio in Q3 2023. So not all of these stocks are winners short term, but Buffett made a majority of the money in Coca-Cola in the late 1980s, 1990s, and then even the early 2000s. So now he's just collecting this massive dividend. And I think given the solid position that Coca-Cola has in the beverage market, probably not any reason that Buffett is going to sell the stock, even if this isn't necessarily a company that he would buy today. Like I talked about earlier, I think Buffett views buying and selling very differently. You want to buy opportunistically and only sell when you really are forced to and when there's a big reason that you need to sell. The fifth stock in the portfolio is one that I think is really interesting, and that is Chevron. Buffett has gotten a lot of attention for his acquisition of shares in Occidental Petroleum, but it's actually Chevron that makes up a bigger piece of the portfolio. Right now, a little under 6% of the portfolio, and that has fluctuated a little bit over time. The big move here is that Buffett was opportunistically buying energy stocks and oil stocks when he thought that the returns were very attractive. I think a lot of people in the market think that there's going to be a massive decline in earnings for a lot of these oil and gas companies as we move to transportation like electric vehicles. But the reality is the global consumption of oil continues to go up. Despite the fact that we're selling more and more electric vehicles, we need more and more energy. Solar and wind are making a part of that. Buffett owns a lot of solar and wind assets through Mid-American Energy, but oil and gas plays a huge role in the industry as well, whether you're talking about transportation or you're talking about utilities. And so that's where he's seeing an opportunity in the oil and gas market. There has been a pullback in the amount of money invested in new wells. I think that kind of went crazy during the 2010s. So that was not an area that Buffett was bullish on the market at that time. But what happened in 2021, 2022? Well, we see pullbacks in capital expenditures. When companies are spending less and the price of oil and natural gas goes up, that means your returns go up. And Buffett loves a company that is generating an increasing level of returns. So that's what we're seeing in the oil and gas market. And that's why I think Buffett is bullish on this industry in general, not just Occidental Petroleum, but actually fifth largest holding, which is Chevron. I'll end this by just going back to the overall look at the portfolio, because I think this is really interesting to just show how important concentration is for Buffett's portfolio in these gains and how that long-term holding period is also critical. Apple did not start as 50% of the portfolio. It started as more like 5% of the portfolio, and then the stock has gone up around 10x over that period of time. So he's hanging on to his winners and letting them become an outsized piece of the portfolio. The other stocks that we talked about are mostly companies that he's held for a very long period of time. Bank of America, American Express, and Coca-Cola on average, have been held for decades. Chevron is a little bit different, a little bit more buying and selling there in the energy market, but has obviously taken a bigger position in energy stocks over the last few years. And with that ownership of Mid-American Energy, is a huge energy investor. So I think there's some interesting takeaways from Buffett's portfolio. Always surprising to see Apple at the top of the list at over 50% of the portfolio. And it doesn't appear that he's unloading that to diversify anytime soon. So we'll see if that changes next quarter. But what did you think about Buffett's portfolio and any of the stocks in it, or how he's concentrated in those stocks? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.